Question 1. An adjuster is investigating a claim where a policyholder's detached garage was destroyed by a fire. The garage was insured for $50,000 at actual cash value, ACV. At the time of loss, the replacement cost was $70,000, and the depreciation was estimated at $15,000. What amount should the adjuster pay for the garage, assuming no deductible applies? A. $70,000. B. $55,000. C. $50,000. D. $35,000. Answer: C. $50,000. When property is insured at actual cash value, ACV, the payout is typically calculated as the replacement cost minus depreciation. In this case, the replacement cost of $70,000 minus $15,000 in depreciation equals $55,000 ACV. However, insurance policies also have a limit of liability, which is the maximum amount the insurer will pay for a covered loss, regardless of the calculated ACV. Since the garage was insured for a maximum of $50,000, the adjuster should pay the policy limit because it is less than the calculated ACV. Remember, the insurer will always pay the lesser of the ACV, the cost to repair/replace, or the policy limit. Question 2. A homeowner's policy includes a deductible. What is the primary purpose of a deductible in an insurance policy from the insurer's perspective? A. To encourage policyholders to file more small claims. B. To reduce the number of small claims and manage administrative costs. C. To increase the policy's overall premium. D. To provide a discount for bundling multiple policies. Answer: B. To reduce the number of small claims and manage administrative costs. A deductible is the amount of money the policyholder must pay out of pocket before the insurance company pays for a covered loss. The primary purpose of a deductible is to eliminate small claims, which significantly reduces the administrative costs associated with processing minor incidents. By sharing a small portion of the loss, policyholders are also encouraged to exercise more care, making them less likely to file trivial claims. Think of it as a barrier that prevents every tiny scratch or ding from becoming an expensive claim for the insurer to handle. Question 3. An adjuster is handling a collision claim for an insured's vehicle. The actual cash value, ACV, of the vehicle before the loss was $15,000. The cost to repair the vehicle is estimated at $13,000, and the policy has a $500 deductible. Based on these figures, which of the following is the most likely outcome, and what amount will the insurer pay? A. The vehicle will be declared a total loss, insurer pays $14,500. B. The vehicle will be repaired, insurer pays $12,500. C. The vehicle will be declared a total loss, insurer pays $13,000. D. The vehicle will be repaired, insurer pays $14,500. Answer: B. The vehicle will be repaired, insurer pays $12,500. When evaluating vehicle damage, adjusters compare the cost of repair to the vehicle's actual cash value, ACV. If the repair cost is significantly less than the ACV, the vehicle is typically repaired rather than declared a total loss. In this scenario, $13,000 in repairs is less than the $15,000 ACV, indicating it will likely be repaired. The insurer's payment for a repair is the repair cost minus the applicable deductible. Therefore, $13,000, repair cost, minus the $500 deductible results in an insurer payout of $12,500. Always consider the deductible when calculating the final payment. Question 4. Which of the following best describes the role of a public adjuster? A. An adjuster employed by an insurance company to investigate and settle claims for their policyholders. B. An independent contractor who handles claims for multiple insurers on a fee-for-service basis. C. An adjuster who represents the insured in a claim, negotiating with the insurance company on their behalf. D. An adjuster who works for the State Department of Insurance to investigate complaints against insurers. Answer: C. An adjuster who represents the insured in a claim, negotiating with the insurance company on their behalf. A public adjuster is unique because they are the only type of adjuster who works exclusively for and represents the interests of the policyholder, not the insurance company. They are licensed professionals hired by insured individuals or businesses to assist in preparing, presenting, and negotiating a claim settlement with the insurance company. This is distinct from staff adjusters, who are employees of an insurer, and independent adjusters, who contract with insurers. Think of a public adjuster as an advocate for the insured, leveling the playing field when a policyholder faces a complex claim. Question 5. An adjuster is determining the proximate cause of a loss. What does the principle of proximate cause require? A. The loss must be directly caused by an intentional act of the insured. B. The loss must be the first event in an unbroken chain of events leading to the damage. C. The loss must be the natural and foreseeable consequence of an insured peril. D. The loss must be the result of multiple contributing factors, none of which are dominant. Answer: C. The loss must be the natural and foreseeable consequence of an insured peril. Proximate cause is a fundamental legal principle in insurance, requiring that the insured peril must be the direct, efficient, and natural cause of the loss, without any independent intervening cause. This means there's an unbroken chain of events connecting the initial peril to the damage or injury. For example, if a lightning strike, insured peril, causes a fire that destroys a house, the lightning is the proximate cause of the fire damage. The adjuster must establish this direct link to confirm coverage. Question 6. A policyholder experiences a covered loss to their home. The adjuster arrives to find that the insured began repairs immediately, discarding damaged property before the adjuster could inspect it. What is the most likely consequence of this action regarding the claim? A. The claim will be paid in full without further investigation. B. The insurer may deny the claim due to the insured's failure to protect property from further damage. C. The insurer may experience difficulty determining the extent of loss, potentially leading to a reduced payout or denial. D. The insured will be reimbursed for the immediate repairs, regardless of policy conditions. Answer: C. The insurer may experience difficulty determining the extent of loss, potentially leading to a reduced payout or denial. Most insurance policies contain a condition that requires the insured to protect damaged property from further damage and to allow the insurer to inspect the damage before repairs or disposal. By immediately discarding damaged property, the insured has hindered the adjuster's ability to properly investigate the loss and determine the scope and cost of repairs. This could complicate the claim process significantly, making it difficult for the insurer to verify the loss and potentially leading to a reduced settlement or even a denial of the claim for non-compliance with policy conditions. Always advise insureds to secure the property but to avoid discarding anything until an adjuster has had a chance to inspect. Question 7. An adjuster receives a claim involving a personal injury resulting from an automobile accident. The injured party received medical treatment, and the medical bills totaled $15,000. The at-fault driver's policy has a bodily injury, B, limit of $10,000 per person/$20,000 per accident. The adjuster identifies that the injured party also has uninsured motorist, UM, coverage on their own policy. What is the maximum amount the at-fault driver's insurer will pay for the injured party's medical bills? A. $20,000. B. $15,000. C. $10,000. D. $5,000. Answer: C. $10,000. The bodily injury, B, liability limit on the at-fault driver's policy specifies the maximum amount the insurer will pay for injuries sustained by any one person in an accident. In this case, the limit is $10,000 per person. Even though the medical bills total $15,000, the at-fault driver's insurer is only obligated to pay up to their per-person limit. Any amount exceeding this limit would typically fall to the injured party's own uninsured motorist, UM, or underinsured motorist, UIM, coverage, or be the responsibility of the at-fault driver themselves. The adjuster must adhere strictly to the policy limits. Question 8. In property insurance, what is the subrogation clause designed to prevent? A. The insured from filing multiple claims for the same loss. B. The insured from profiting from a loss. C. The insurer from being responsible for losses caused by third parties. D. The insured from suing the at-fault party after receiving payment from their own insurer. Answer: B. The insured from profiting from a loss. The principle of subrogation allows the insurer, after paying a claim to its insured, to step into the insured's shoes and pursue recovery from the negligent third party who caused the loss. This prevents the insured from being compensated twice for the same loss, once by their own insurer and again by the at-fault party, thereby upholding the principle of indemnity and preventing unjust enrichment. For example, if your insurer pays for your car damage caused by another driver, subrogation allows your insurer to then seek reimbursement from that driver's insurance company. Question 9. An adjuster and the insured disagree on the amount of loss for a property damage claim. The policy contains an appraisal clause. How is this disagreement typically resolved under such a clause? A. The dispute is automatically submitted to binding arbitration with a state regulator. B. Each party selects an independent appraiser, and if they cannot agree, an umpire is chosen to make a final decision. C. The insurer's initial offer becomes the final settlement amount, as the adjuster's decision is binding. D. The insured must file a lawsuit to dispute the amount of loss. Answer: B. Each party selects an independent appraiser, and if they cannot agree, an umpire is chosen to make a final decision. An appraisal clause is a common policy provision designed to resolve disputes specifically regarding the amount of a property loss, not whether the loss is covered. When invoked, both the insured and the insurer each hire their own independent appraiser. If these two appraisers cannot agree on the amount of loss, they jointly select an impartial umpire. The agreement of any two out of the three, the two appraisers or one appraiser and the umpire, determines the amount of loss, which is usually binding. This process aims to avoid costly litigation when coverage is not disputed. Question 10. A policyholder has a homeowner's policy with Special Form HO3 coverage. A loss occurs when the insured's dog chews through and damages a significant portion of the home's drywall and electrical wiring. How will the adjuster typically handle this claim? A. The damage is covered because HO3 is an open perils policy. B. The damage is excluded under the animals owned by an insured exclusion. C. The damage is covered under the personal property section, not the dwelling. D. The damage is covered if the dog was specially trained and certified. Answer: B. The damage is excluded under the animals owned by an insured exclusion. While an HO3 special form policy provides open perils coverage for the dwelling, meaning it covers all direct physical losses unless specifically excluded, damage caused by animals owned or kept by an insured is a common exclusion. This exclusion typically applies to damage like chewing, scratching, or tearing caused by pets. Therefore, the adjuster would likely deny coverage for the drywall and wiring damage caused by the insured's dog. This highlights the importance of knowing specific policy exclusions, even in open perils forms. Question 11. An adjuster discovers that a claim for a stolen vehicle was filed by the insured after the vehicle was actually sold to a third party and not officially transferred. This situation is an example of what type of hazard? A. Physical hazard. B. Moral hazard. C. Morale hazard. D. Legal hazard. Answer: B. Moral hazard. Moral hazard refers to the increased chance of loss or a larger loss due to an individual's dishonest tendencies or character. In this scenario, the insured is attempting to commit insurance fraud by filing a false claim for a vehicle they no longer own. This deliberate deception to gain financially from an insurance policy is a classic example of moral hazard. Adjusters must be vigilant in identifying such fraudulent claims to protect the integrity of the insurance system. Question 12. In a state with a no-fault auto insurance system, which of the following is generally true regarding claims for minor injuries? A. Injured parties can always sue the at-fault driver for all damages. B. Each party's own insurance company pays for their medical expenses, regardless of fault, up to a certain threshold. C. Claims for property damage are handled under the no-fault system. D. Liability claims are completely eliminated in all circumstances. Answer: B. Each party's own insurance company pays for their medical expenses, regardless of fault, up to a certain threshold. No-fault auto insurance systems are designed to expedite the payment of minor injury claims by requiring each party's own insurer to pay for their policyholders' medical expenses and lost wages, regardless of who was at fault. This helps reduce litigation for less severe injuries. While no-fault laws vary by state, they generally include a monetary threshold, or a verbal threshold, that must be met before an injured party can sue the at-fault driver for non-economic damages like pain and suffering. Remember, no fault primarily applies to bodily injury, not typically property damage. Question 13. An adjuster receives a first notice of loss, FNOL, for a complex commercial property claim. What is the most critical immediate step the adjuster should take after verifying coverage? A. Begin negotiating a settlement amount with the insured. B. Issue an immediate payment for undisputed damages. C. Initiate a thorough and prompt investigation of the loss. D. Advise the insured to start repairs immediately. Answer: C. Initiate a thorough and prompt investigation of the loss. After confirming that a policy is in force and the claim appears to fall within general coverage, the most critical immediate step for an adjuster is to begin a thorough and prompt investigation. This involves gathering facts, inspecting the damage, interviewing witnesses, collecting documentation, and establishing the cause of loss and extent of damages. Rushing to settlement or payment without a proper investigation can lead to incorrect decisions or fraud. A methodical investigation ensures fairness to both the insured and the insurer. Question 14. Which of the following statements about unfair claims settlement practices is true? A. Adjusters are permitted to misrepresent pertinent facts or policy provisions relating to coverages at issue. B. Insurers must affirm or deny coverage of claims within a reasonable time after proof of loss statements have been completed. C. Adjusters may compel policyholders to institute litigation to recover amounts due under an insurance policy by offering substantially less than the amounts ultimately recovered. D. Failing to acknowledge communications from policyholders with reasonable promptness is an acceptable practice. Answer: B. Insurers must affirm or deny coverage of claims within a reasonable time after proof of loss statements have been completed. State insurance laws and regulations, often referred to as Unfair Claims Settlement Practices Acts, mandate that insurers and their adjusters handle claims fairly and promptly. One key requirement is to affirm or deny coverage within a reasonable time once all necessary information, such as the proof of loss, has been submitted by the insured. The other options describe prohibited unfair practices, such as misrepresentation, forcing litigation by lowballing offers, or ignoring communications. Always prioritize timely and transparent communication throughout the claims process. Question 15. An adjuster is examining a commercial general liability, CGL, policy for a claim involving bodily injury to a customer on the insured's premises. The policy has a general aggregate limit of $1 million and a per-occurrence limit of $500,000. If this is the first claim of the policy period and the damages are $600,000, how much will the CGL policy pay? A. $1 million. B. $600,000. C. $500,000. D. $0, as the claim exceeds the per occurrence limit. Answer, C. $500,000. Commercial general liability, CGL, policies typically have both a per occurrence limit and a general aggregate limit. The per occurrence limit is the maximum amount the policy will pay for any single incident or occurrence, regardless of the total damages incurred. In this scenario, even though the damages were $600,000, the per occurrence limit of $500,000 dictates the maximum payout for this single claim. The general aggregate limit is the total maximum the policy will pay for all claims during a policy period, but it does not override the per occurrence limit for a single event. Question 16. What is the primary purpose of an errors and omissions (E&O) insurance policy for an independent adjuster? A. To cover the adjuster's personal auto accidents. B. To protect the adjuster from liability arising from professional mistakes or negligence. C. To provide health insurance benefits for the adjuster and their family. D. To insure the adjuster's office building against property damage. Answer, B. To protect the adjuster from liability arising from professional mistakes or negligence. Errors and omissions, E&O, insurance is a type of professional liability coverage essential for independent adjusters. It protects them against claims of financial loss caused by their negligent acts, errors, or omissions while performing their professional duties. For instance, if an adjuster incorrectly interprets policy language, delays a claim, or makes an error that causes financial harm to a client, the insurer or insured E&O coverage would respond. This coverage is crucial because adjusters are held to a high standard of professional conduct and accuracy. Question 17. An adjuster receives a proof of loss form from an insured. What is the primary purpose of this document? A. To serve as the initial notice of loss to the insurer. B. To acknowledge the adjuster's visit to the loss site. C. To formally present the insured's sworn statement regarding the loss, requested amount, and cause. D. To initiate subrogation efforts against a third party. Answer, C. To formally present the insured's sworn statement regarding the loss, requested amount, and cause. The proof of loss is a formal, sworn statement from the policyholder to the insurer, detailing the loss's cause, circumstances, and the amount of damage claimed. It typically includes an itemized list of damaged property or expenses, along with supporting documentation like receipts or estimates. This document is crucial for the insurer to evaluate the claim thoroughly and is often a prerequisite for final settlement under the policy conditions. It essentially serves as the insured's final declaration of what they believe they are owed. Question 18. An adjuster is handling a claim involving a property insured at replacement cost value, RCV. After the loss, the insured decides not to replace the damaged property but instead sells the land. How will the adjuster most likely settle this claim? A. The claim will be paid at replacement cost value. B. The claim will be paid at actual cash value, ACV. C. The claim will be denied entirely as the property was not replaced. D. The claim will be paid at an agreed value predetermined by the policy. Answer, B. The claim will be paid at actual cash value, ACV. Replacement cost value, RCV, policies typically have a condition that requires the insured to actually repair or replace the damaged property to receive the full replacement cost. If the insured chooses not to repair or replace the property, or if they sell it, the insurer will usually only pay the actual cash value, ACV, at the time of loss. This prevents the insured from profiting by receiving funds for a replacement they never intend to make. Always advise policyholders that RCV payment is contingent on actual replacement. Question 19. A homeowner's policy covers additional living expenses, ALE. Under what circumstances would an adjuster typically authorize payment for ALE? A. The insured chooses to remodel their home after a non-covered event. B. The insured's home becomes uninhabitable due to a covered peril. C. The insured incurs expenses for normal commuting to work. D. The insured's regular utility bills increase. Answer: B. The insured's home becomes uninhabitable due to a covered peril. Additional living expenses, ALE, also known as loss of use coverage, is designed to reimburse the insured for the necessary increase in living expenses incurred when their dwelling becomes uninhabitable due to a covered loss. This could include the cost of a hotel, temporary rental, or increased food costs beyond their normal expenses. The key condition is that the dwelling must be uninhabitable and the cause of the uninhabitability must be a peril covered by the policy. This coverage aims to maintain the insured's normal standard of living during the period of repair or replacement. Question 20. An adjuster is assessing a claim where the insured sustained a broken arm after slipping on ice at a local grocery store. The grocery store's commercial general liability, CGL, policy will likely be involved. The adjuster will need to determine if the store was negligent. Which of the following elements is generally not required to prove negligence? A. A legal duty owed by the grocery store to the injured party. B. A breach of that duty by the grocery store. C. An intentional act by the grocery store to cause harm. D. Damages or injury sustained by the injured party as a result of the breach. Answer: C. An intentional act by the grocery store to cause harm. Negligence, in a legal context, is generally defined by four key elements: duty, breach of duty, causation, and damages. An intentional act to cause harm is not a requirement for negligence; rather, negligence implies a failure to exercise reasonable care. If the grocery store had a duty to maintain safe premises, duty, failed to remove the ice or warn customers, breach, and this failure directly led to the broken arm, causation, resulting in medical bills, damages, then negligence could be proven. The adjuster's role is to investigate whether these elements are present. Question 21. Which type of adjuster is typically employed by an insurer and works directly for that insurer on salary? A. Independent adjuster. B. Public adjuster. C. Staff adjuster. D. Emergency adjuster. Answer: C. Staff adjuster. A staff adjuster is a salaried employee of an insurance company who investigates and settles claims on behalf of their employer. They are distinct from independent adjusters, who are self-employed and work for various insurers on a contract basis, and public adjusters, who represent the policyholder. Staff adjusters are an integral part of the insurer's internal claims department. Knowing the different types of adjusters helps clarify their roles and who they represent in the claims process. Question 22. An adjuster is processing a workers' compensation claim. Which of the following benefits is not typically covered under a standard workers' compensation policy? A. Medical expenses for job-related injuries. B. Lost wages, disability benefits, due to job-related injuries. C. Pain and suffering damages resulting from a job-related injury. D. Rehabilitation services to help an injured employee return to work. Answer: C. Pain and suffering damages resulting from a job-related injury. Workers' compensation is a no-fault system designed to provide specific benefits to employees injured on the job, regardless of fault. These benefits typically include medical expenses, lost wages, disability income, and rehabilitation services. However, workers' compensation statutes generally do not allow for pain and suffering damages, which are considered non-economic damages and are more common in tort-based liability lawsuits. This trade-off is fundamental to the workers' compensation system, where the employee gives up the right to sue for pain and suffering in exchange for guaranteed, prompt benefits. Question 23. An adjuster receives a proof of loss form from an insured. What is the primary purpose of this document? A. To serve as the initial notice of loss to the insurer. B. To acknowledge the adjuster's visit to the loss site. C. To formally present the insured's sworn statement regarding the loss, requested amount, and cause. D. To initiate subrogation efforts against a third party. Answer, C. To formally present the insured's sworn statement regarding the loss, requested amount, and cause. The proof of loss is a formal, sworn statement from the policyholder to the insurer, detailing the loss's cause, circumstances, and the amount of damage claimed. It typically includes an itemized list of damaged property or expenses, along with supporting documentation like receipts or estimates. This document is crucial for the insurer to evaluate the claim thoroughly and is often a prerequisite for final settlement under the policy conditions. It essentially serves as the insured's final declaration of what they believe they are owed. Question 24. What is the main difference between contributory negligence and comparative negligence in determining liability for a loss? A. Contributory negligence allows partial recovery, while comparative negligence bars recovery if the claimant is even slightly at fault. B. Contributory negligence bars recovery if the claimant is even slightly at fault, while comparative negligence allows for partial recovery. C. Contributory negligence applies only to property damage, while comparative negligence applies only to bodily injury. D. Contributory negligence is used in states with no-fault laws, while comparative negligence is used in tort states. Answer, B. Contributory negligence bars recovery if the claimant is even slightly at fault, while comparative negligence allows for partial recovery. These are two legal doctrines used to determine how a claimant's own negligence affects their ability to recover damages. In states following contributory negligence, if the claimant is found to be even 1% at fault for their own injury or damages, they are completely barred from recovering anything from the other party. Conversely, comparative negligence allows the claimant to recover damages reduced by their percentage of fault. For example, if a claimant is 20% at fault and suffers $100,000 in damages, they could still recover $80,000 under comparative negligence. Adjusters must know which doctrine applies in their jurisdiction. Question 25. An adjuster receives a claim for water damage to a policyholder's home. The policy specifies that damage caused by flood is excluded. The damage occurred when heavy, continuous rainfall caused a nearby river to overflow its banks and inundate the property. How should the adjuster handle this claim? A. Approve the claim, as the water came from rainfall, not a specific flood. B. Deny the claim, as an overflowing river due to heavy rainfall is typically considered a flood. C. Approve the claim, as heavy rainfall is an insured peril under most homeowners' policies. D. Deny the claim, but advise the insured to seek coverage from their auto policy. Answer, B. Deny the claim, as an overflowing river due to heavy rainfall is typically considered a flood. In insurance, flood is generally defined broadly to include the overflowing of natural bodies of water, like rivers, lakes, or streams, caused by heavy or prolonged rainfall. Since the policy explicitly excludes damage caused by flood, the adjuster should deny the claim. Even though the source was heavy rain, the manner of the water entering the home, overflowing river, falls squarely within the common definition of flood exclusion in standard homeowners policies. Flood coverage is typically available only through a separate National Flood Insurance Program (NFIP) policy.